All right. Well, if that was 2017, let's go back in time further. Because the very first 5-stock sampler ever picked was 5 stocks for the next 5 years, which was published on September 2nd, 2015. By the way, it's sometimes hard to look this far back on iTunes, presumably Google Play. It's hard to find more than about 100 podcasts ago. But given that we've been doing our weekly podcast more than 220 times at this point, you can imagine a lot of our great work is buried somewhere there in the internet. But if you do know the title, like 5 stocks for the next 5 years, you can usually Google and find the sound files for any of the podcasts that we've done in the past. This one, no exception. So September 2nd, 2015. Emily, do you remember what you were doing that day?
Not that day exactly, but again, generally that month, I remember that I was a junior in college, and that first semester, my junior year, I actually lived in Florence. I did a semester abroad there, which was probably the most basic, excusing the language, but basic semester abroad that an American can do. I went to Florence, Italy, and yes, I did drink a lot of wine and eat a lot of pizza.
And I love that you're calling that your semester abroad because your entire 4 years was abroad. You went to NYU Shanghai.
I needed a break from the 4 years of Chinese food. So I did take a semester and I went to Florence and I treated myself.
Well, that does sound absolutely delightful. I did go to my calendar and I see that that morning I was rooting about the basement of my house, trying to clean things up, specifically looking for Magic the Gathering cards that a numbskull friend of mine had left in a bag somewhere on the first floor of my house years ago. And for anybody who follows Magic the Gathering, and there are not that many of them, although Richard Garfield, its founder, is a past guest on this show. Really enjoyed having Richard on last year to talk about his most recent game designs. Anyway, Magic the Gathering, those cards appreciate over time, kind of like a good baseball card. Some of the earliest days of the beta. I have some beta Magic the Gathering cards, and this friend of mine was like, hey, I left some of those in your house. Could you find them for me? And I'm happy to say I did ultimately find them, and so you're very welcome, my friend Tom, that you got your Mox Pearl. All right, well, it was 5 stocks for the next 5 years, and how has the stock market done since September 2nd, 2015, 4 years ago, right about this week? And the answer is the market's up 51%. So that's 4 good years. And that's a higher hurdle than the 3% we needed to jump over with 5 good stocks, Emily. So let's see how we've done here. Now, what were the 5 stocks? Well, alphabetically by company name, they were Activision Blizzard, Casey's General Stores, FireEye, Mercado Libre, and the Middleby Corp. I'm sorry, did I skip one? I think I did say it. Didn't I say it? I did say the company name.
I heard it slipped in there.
Good. Yeah, so those are the 5. And one of them has been really, really bad. And that's one whose name I won't say on this podcast because of how deeply upset I am with the company and how it's performed, but which has a ticker symbol FEYE. Let's start with the worst. Worst is first, Emily. The stock was at $37.47 in 2015. It's down to $13 and change today, down about 63% when the market was up 51%. So 5 stocks for the next 5 years, not that one.
Yes, he who shall not be named was a good idea that was just executed poorly. This particular company, FireEye, faced significantly higher costs than expected when they migrated to their cloud-based models. Their renewals just became abysmal. The top-line growth really dropped off a cliff. And, they really needed some inept competitors, and what they got was some really strong competition.
Cybersecurity, a big field these days.
I mean, when you look at the field, even today they're operating in a field that is presumably and should be a very, very lucrative field to be in. But the problem is when you operate in a lucrative field like that, you also, other people aren't unaware of the fact that that is an area that is growing and of high demand. So, Palo Alto Networks really put the nail in the coffin for FireEye. That's not to say that, oh no, I said it. That's not to say that, they are completely buried in the ground yet, but it is to say that, Palo Alto's network suite has really just trumped this company's product.
Yep.
Stolen a lot of their customers.
Well, and I am happy to say that Palo Alto Networks is a stock pick for Motley Fool Rule Breakers.
It is.
I wish I'd selected it for this sample. I sampled improperly. We've also had some nice winners. Fortinet has been a very fine stock for Motley Fool Stock Advisor members. So I tried to make up for this inadequate early cybersecurity pick by picking a few others along the way. But that doesn't help this 5-stock sampler. And so that puts us minus 114 points in the hole. Let's add further to that hole with the Middleby Corporation, which is a company that we admire. In fact, its longtime CEO recently came on the Motley Fool board, Salim Basul. We're really happy to have Salim on our board. He's a remarkable man, but maybe in part because he recently retired as CEO, but I don't think really. But anyway, the stock up only 9% when the market was up 51. So that's 42 percentage points more against us, Emily.
I will say that this manufacturer of commercial cooking equipment and appliances does operate in a very cyclical business, as you might expect. So it faces a lot of those same problems that we talked about earlier. Before this earnings call, the stock was actually an outperformer. So it wasn't until the most recent earnings call that the stock has really been hammered for Middleby. That's largely because of a few different reasons. They have exposure to the European market, concerns about Brexit and the slowdown there has hurt their exposure in that regard. Slowdown in demand for U.S. industrial purposes as well, not to mention the impact of tariffs, which people are always concerned about with companies like this. It's really hurt their short-term margin expansion. Here's what I will say. My parents have recently purchased a townhome in Dallas, moving down to the city. And my mom was pumped because it came with a Viking range in it. That's one of Middleby's namesake brands.
That's right. It's an acquisition a few years ago, which is it's probably biggest, best known brand.
Yeah, and it's that brand in particular has been performing really well for them. So if my parents have anything to say about it, this one might come back yet.
All right. Well, unfortunately, your parents, as good as they are, can't help the performance of those two stocks right now. So we're minus 156 points with 3 stocks left. Let's take them alphabetically. Activision Blizzard, really happy to say this longtime video game entertainment leader is up 95%. So that's 44 percentage points ahead of the market over the last 4 years.
Yeah, despite all of its controversies that we've seen over the past few years, 2015, 2016, 2017 even were great years for Activision Blizzard. You can think back to the success of a lot of their brands like Overwatch and Diablo. More recently, the relaunch of classic World of Warcraft. These are all great legacy brands that kept bringing in recurring revenue, recurring subscribers. And to be clear, it was down 26% in 2018 alone. So it's not been an easy ride for investors.
That's right.
Yeah, but so the majority of these gains were gained in 2016 and 2017, back when there were fresh installments of a lot of these games. But it does go to show the fact that this company does tend to move not only with gamer sentiment, I wouldn't call it investor sentiment, gamer sentiment, but also with just launches of their popular brands.
Our cost originally for Activision Blizzard for Stock Advisor members, August 9th, 2002, $3.14. And actually, 6 months later, it was down. It had been cut in half, so I added at $1.60 or so. So today, with it around 56, it has been a mega winner. So it's a reminder that a big, vital business and a leader like this, held over time, can do fantastic things for your portfolio. But you're right, Emily. It was kind of down with the video game doldrum. It seemed like everybody was playing Fortnite last year and nobody was talking about anything else. And so companies like this company were kind of harmed a little bit as a consequence. But this remains a long-term buy and hold, big-time winner. And I'm happy to say for this 5-stock sampler, yeah, it's up 44 percentage points on the market, which means we're now at minus 112 with 2 left. Casey's General Stores is next. Emily, it's kind of sad to say it's only 9 percentage points ahead of the market. So it's up 60% or so, above that 51. So, 9 percentage points, not bad. Not really helping this 5-stock sampler that much. Any thoughts briefly on Casey's?
Well, let me just first say that I was raised in Texas, so I'll always be a loyal Buc-ee's fan. But until Buc-ee's become publicly traded, I will settle for its Midwest equivalent, which is Casey's General Stores. It actually didn't really start to outperform until recently, until the end of May this year, when they started to let some of that revenue slide to the bottom line. So they had some gross profit increase, which helped, gross margin expansion, cost-cutting measures. In fact, same-store sales during May were up nearly 6%. So great recent performance from this company.
Thank you. And I have not been to a Buc-ee's. but it
You should go if you're ever in Texas,
does
in
it
the
have
middle
great
of nowhere.
pizza? Casey's has the great pizza
Buc-ee's
reputation.
has great everything else. So you get your great, like honey roasted nuts, for instance, more
I like
Texas-based
those.
food.
All right. Sounds good. Well, speaking of sounding good, I've got one final stock that's part of this 5-stock sampler. Emily, are you familiar with the concept of the Deus Ex Machina?
I am, and I'm trying to figure out how you're going to relate it.
All right. So my recollection from my undergraduate studies is this typically would happen at the end of ancient Greek plays when something would swoop in at the end and save the day. So, I believe it comes from the Latin "god out of the machine." So a machine's wheeled on stage and out comes somebody godlike to save everything. The name of this godlike company, the 5th stock that was included on 5 stocks for the next 5 years, Mercado Libre. And I'm really happy to say that Mercado Libre 4 years ago was at about 110. So today at 571, this stock is up 420% for listeners. That's 369 percentage points ahead of the market. This one stock, 3 of these companies did beat the market, but this one stock has caused this first ever 5-stock sampler to average a gain of 103.9% against the market's 51%. These 5 stocks as a sampler are 53 percentage points ahead of the market 4 years later.
And that's generally how the market works as well. The vast majority of companies in the market do not perform well, but the ones that do really do. So we're happy to have Mercado Libre in here. Since we already talked about it a little bit before, I'll just bring us back to 2015. And let's look at some of the numbers that Mercado Libre was posting in 2015. Back then, when the day was picked, revenues were only 30% of what they were today. And the earnings call that was published only a few days before recording that podcast 4 years ago, Mercado Libre was doing $1.65 billion in gross merchandise value with payment transactions of about 18 million. Now they have 1.65 billion in GMV grew to 3.4 billion, and that 18 million in transactions volume now 6.5 billion. So this company, while it looked like a riskier bet back in 2015, has really expanded on its value proposition.
And it's been a spectacular company, a true blue rule breaker. And it only takes one. Now, we are not premising to just try to roll the dice and hit a home run once. In fact, I'm happy to say that not just in this group of 5 stocks, the majority of them did beat the market, but all 3 of these samplers well ahead of the market and powered by a number of stocks. But when you have a single home run stock, and we have a knack for finding those at Rule Breaker Investing, they really can power your overall returns. So you see, admittedly, in only a group of 5 stocks, there's always going to be a lot of luck in any group of 5, for better or for worse. But we're awfully fortunate to have had Mercado Libre called out 4 years ago this week.